Snipers, you have to see what's happening in the cryptocurrency market this Saturday as Bitcoin has maintained itself below 35,000 US dollars, and it is clear that the bears are defending the 50-day moving average right now, where we also have confluence with the weekly and monthly open along with the $34,788 resistance level, and altcoins are not necessarily seeing anything violent. Notice how the total cryptocurrency market cap down 1.65%, while Bitcoin down 1.25%. Ethereum not necessarily being too weak or strong against Bitcoin. We're just seeing normal fluctuations. But what's more important is tomorrow we're going to be seeing weekly candles close, and we want to address what we're watching as we start to see futures markets open, because that's going to give us a hint as to where institutions are placing their early bets in the week and how we can expect the overall week to go. Notice how with Bitcoin on the weekly chart, we have not tested this 50-week moving average, which in my opinion is a positive thing because we've only tested it with one weekly candle. And garden variety market behavior says when you reach a destination and you immediately turn around, that typically is the final destination, right? If you're having a cup of coffee though, that typically means that that's not the final destination. There could be another destination in mind. But if we were to just look at the weekly chart and say to ourselves, all right, Bitcoin has only seen a test of the 50-week moving average. Yes, we broke home base at the 20-week moving average here. Obviously, that was the top for Bitcoin into this bear cycle. But if we're able to hold the 50-week moving average and we never come back down to test it, this could be a puzzle piece, assuming that we've seen the worst of the downside, and that would have been on the 21st of June, where we saw the weekly candle come down to 28,805 US dollars in the Binance USDT chart. So that's a big puzzle piece we need to talk about. The weekly candle is closing tomorrow, and if we start to see bullish price action come back towards 34,788, that to me is going to be the final confirmation that we've seen the worst of this, because the 50-day moving average now is so close to 34,788, the weekly and monthly open, of course, that now that we get some strength to 34,788, the bulls really have a chance to rescue the 50-day moving average, and that would be the first time since we saw this bear cycle. Now we can start assuming a retest of 40,000, potentially come down, and then in the latter part of this year, December, maybe come back up to the $50,000 level where we might have the 200-day moving average. That's all off the table for now, but what really matters is how is this weekly candle going to close? We're going to talk about that today and then address a little bit of altcoins, but more importantly, what we're watching with traditional markets like the DXY, ending the week on Friday with this bearish tail, bearish candle. Does that mean that institutions are deploying their US dollars into other assets? Well, US oil, of course, starting to come up. Commodities are a good leading indicator. The S&P 500 out of nowhere after seeing this extremely bearish price action on Thursday, we immediately recovered to see new all-time highs on Friday. Is this real? Are we going to see continuation? That matters for Bitcoin because S&P 500 strong, DXY stabilizing or coming down could really affect Bitcoin, which will then affect the altcoins, because it's clear right now that altcoins are not doing extremely bad. They're really just mimicking Bitcoin, and that's not a bad thing. I think that that's going to be the storyline until we can rescue 34,788. And you guys are watching the Snipers channel. My name is Naeem. I don't want to keep going into the analysis before the intro because I need to remind you guys to smash the like button for the YouTube algorithm. So I'm already into this Bitcoin analysis. I always get into my analysis. I just love charts. It's an art and a science, right? Bitcoin right now, the fact of the matter is that we've yet to come up to 34,788. And that to me is the biggest concern because we don't have to go into the volume profile. We know that at any point in time right now, Bitcoin is in a range that can take us to 26,000 US dollars. And that's going to be a fact until we can get above 35,000. So the reason that's a fact is the weekly and monthly open confirmed to all of us that 35,000 indeed is a important level. So with the 50-day moving average coming so close to 35,000 now, this is the first time that we've got the 50-day moving average to this level. We start to come up to 35,000. Now we're really starting to see the blueprint change. We get to 36,600, which is currently the previous weekly open. For those that are tuned into our channel, we always have our previous weekly open in green. That's going to reset tomorrow. That's going to assume that on the weekly chart, all we saw was a test of the 50-week moving average. We get above 34,708. Now we can really go into a more bullish mindset. But for now, if we stay below 35,000 at any point in time, we could see sell pressure come from the downside. And if that happens, I believe Bitcoin will not be below $28,000. And that's worst case scenario. If we see downside pressure, I think that 28,000 is this channel support. It makes sense to form a lower low here to stay inside of this flag. But if we see a test, of the the $26,000 level, we know there's a lot of volume below 30,000. Now we can start to see institutional pressure. That would only give us a wick below 28,000. So that's why I'm telling you guys, have those buy orders below 26,000 up to 20,000 just in case, because there's a lot of pressure here, and you would much rather have a position at 26,000 than 28,000, because if we do just see a wick, that means that we could just maintain price action above 28,000 for a while and then eventually work our way back up to 35, right? And at that point, we can start looking at a bullish scenario. But I think we're closer to the bottom than most people think. And I say that because it's not just what's happening on the charts, but it's also the on-chain metrics. You see with realized losses, we've seen the most amount of realized losses in the history of Bitcoin as an asset, and that was a couple days ago. And so I think it was over 3 billion in realized losses, and that typically is only something that occurs during capitulation phases, right? So we hear Kathy Wood from ARK talk about that a lot, and so a lot of the signs of on-chain metrics are leading us towards the idea that we are in a capitulation phase, which means that from here we only could really see upside, right? And so that's why I'm so confident that below 26,000 we only see a wick if that happened on the downside. So I want to talk about altcoins just a little bit. Ethereum coming back down to this 200-day moving average. 1980 is the big level here. We get below 1980. I think that would only happen if we break 30,000 with Bitcoin, because we break 30,000, that means we're seeing a lot of volume. It's going to take a lot of sell pressure to break 30,000. We know there's a lot of buyers there. So if we see enough sell pressure on the order books, I think that's also going to cause Ethereum to break 1980. And the same way 26,000 is those prime entries for Bitcoin, I think from that 1760 to 1440 range, that's also the prime entry for Ethereum. That leads us towards that previous all-time high. And of course, if we start to see more strength with the Ethereum in a Bitcoin chart, then Ethereum is going to be even better of a play than Bitcoin, because we get above 65,000 Satoshis. We get back above the 50-day moving average. That's bullish. I'm not surprised, though, that we're back below the 50-day moving average, because Bitcoin is not above 35,000. And so there's still fear in the market. You look at the fear and greed index at 20 right now. It's a lot of fear. And so with this coming down, if we form another low in the macro, it doesn't matter because we're in a bullish trend. So you guys know that. And so we'll monitor this, but altcoins are not doing too bad. That's why the market cap here at the total is sitting at the 200-day moving average, and it's pretty much mimicking Bitcoin's price action as much as possible, right? And so you stick to those fundamentally sound coins like Cardano, Ethereum, then you'll be fine, right? Others dominance also not doing anything new, but still the most bullish chart right now with Bitcoin dominance still fighting to maintain itself at this weekly and monthly open, still below this 100-day moving average. And when we look at traditional markets, they are going to be opening up here, futures tomorrow, of course. I'm going to be monitoring the DXY, and I really want to see whether or not this is going to break 91.92, because that would signal that we're kind of coming back into a downtrend, because you kind of see there's a peak here, and it kind of shows confluence of this area. We get down here, that's very positive for assets. But if we stay above 91.92, then that's not a bad thing. We just don't want to see our price action get above 92.62 because that brings the volatility up to the 94 range. And we don't want that for the DXY because that right here, this range is going to hurt traditional markets. But I think commodities are going to be the real leading indicator to this. So what I'm watching is we have this weekly open here for US oil, for example, and that's at 75. If we can get above 75 into next week as we start to see futures open, that would assume to me that this is real and that we're going to see continued upside here. And that would be a very positive thing. But we see a rejection here, then this could have just been a fake out, right? So I'm going to be watching commodities. I think that's kind of what we really want to monitor right now with the S&P 500 closing Friday with new all-time highs. That right there is a reason to watch these markets because we know that that's going to affect the cryptocurrency market and the confidence in the markets. So I hope you guys enjoyed today's analysis. I know we went a little bit in depth. I want to give away one of my favorite books on value investing to one of you watching, Principles by Ray Dalio. If you want to win this book, comment below and share this video. I'll pick a winner from our video yesterday and we'll wrap up this video. Let's see. Tom Gina says, the new kid on the block, Ethereum is going to keep the bull run and altcoin season going. Yes, we've been sticking to our analysis and I'm here to be your umpire. So I'm always going to give you guys the honest perspective. And the fact of the matter is others' dominance was above the 20-week moving average for so long that it was the most bullish chart in crypto. So I stayed bullish on altcoins, but I was very clear that it was specific altcoins like MakerDAO, for example, the largest decentralized organization, or Ethereum, right? So that's where you want your money. You don't want it in the meme coins because those are the ones that see the worst downside during these bear cycles, right? So with that, thank you all for tuning in today. I appreciate each and every one of you snipers tuned into our channel, and I will see you guys on a Sunday tomorrow when we see futures markets open. Our previous weekly open on our charts will be updated, and we'll go from there and see how the week is going to unfold. Until next time, snipers.